Guys, I think this video might be one of the most important videos I have covered so far, so please take the time to really digest and understand what I'm covering in this video. Today, I'll be talking about a potential market crash that could be the biggest we have seen in scale throughout history. I've been reading through articles after articles after articles about a company at the center of it all, and the articles are all unnecessarily written in a confusing way, so in this video, I'll be explaining this situation in layman's terms as easily as possible and why this company could cause a market collapse not only in China but on a global scale. So there's one company at the center of this situation, and that company is a Chinese real estate investment firm called Evergrande. The problem with this company, simply put, they're overloaded with debt. And honestly, this is all you need to know about the company in terms of its problem. Evergrande is China's second largest property developer, founded in 1996. To understand the size of this company, here are some numbers. Evergrande is running more than 1,300 projects in over 280 cities. They have had success with real estate, so they expanded horizontally a little bit, acquiring an electric vehicle company as well as Guangzhou FC, which is a football club, in case you didn't know. And they own a lot of other smaller companies, but their main focus and main business is in the field of real estate. Now, the problem with this company is that it is in debt, and it's not just a sizable amount. It's in a lot of debt, and by a lot of debt, I mean $310 billion. The company is going through hard times with insolvency issues and underperformance in its revenue. When the Chinese government put up a list of companies that could pose a threat to the market and lead to its collapse, Evergrande was also on the list, and it was also recently revealed that they begged the government for help in their backdoor listing plan as well. Now, why would Evergrande act so desperate when this amazing company in fact has A, never seen losses, and B, has always had its current assets exceed its current liabilities in every single accounting period? Something shady is happening, and Professor Boyle, a former hedge fund manager and currently a YouTuber, says something very interesting. He says one of the biggest problems for Evergrande, which is a general problem in China, is that the reason the company is struggling, having never reported a loss, is that bad investments in China are never written down. If a company like Evergrande doesn't acknowledge losses, they just show up on the balance sheet as inventory. So I've mentioned this over and over again throughout my videos, but I don't invest in Chinese stocks due to several reasons, one of which is a lack of overall transparency. Besides this, we can think of other reasons like the government being capable of taking down companies that are worth hundreds of billions of dollars. And at this point, you might be wondering what happened to the price of the company's stock. Evergrande stock moved down over 80% since the beginning of this year. And if we can look at the price of Evergrande's dollar bonds as well, these are collapsing as well. The company's dollar bonds price has dropped over 70%. I mean, if a company's bonds become utter crap like this, it only makes sense that the company's stock also collapses. What's also concerning is how bonds of Evergrande's real estate counterparts are also dumping like crazy and signaling a potential crash. Now, out of Evergrande's $310 billion debt, about $85 billion comes from bonds and loans from banks. So basically, these are the liabilities for which Evergrande actually pays interest on. $67 billion comes from shadow banking systems, so basically money from shady sources. Now, the rest of the $158 billion is actually the most important part. This is the amounts of accounts payable. So basically, when Evergrande is doing business and they're developing real estate, they need to buy materials and resources needed, right? But when they bought whatever they needed from their suppliers and other companies, they didn't pay in cash. It all went down as accounts payable, which basically means that they owe the suppliers money. So do you see where this is going? Financial institutions and suppliers rely heavily on Evergrande, and a lot of companies could go bankrupt if they're not paid. This is essentially a domino effect of the entire Chinese market with Evergrande at the center of it. Not only that, we also need to think of Evergrande's employees. The company has over 123,000 employees alone, and that doesn't include the number of construction workers who are hired for each of their projects. Now, before we move on further, if you find this video to be pretty helpful, please smash that like button to support me on YouTube. So knowing that the real estate market in China is the biggest in the world and that the market accounts for 10% of China's economy, a complete collapse would cause devastating repercussions to not only the Chinese economy, but also the stability of the Chinese Communist Party, the CCP, and the global economy as well. And if we play the devil's advocate and look at the numbers, it could also be said that they might get a government bailout. While their liability amounts to $310 billion, the interest they actually need to pay imminently amounts to $669 million, which is still a lot, but much more manageable. So while Evergrande is having a hard time with insolvency, if the government were to help out just a little bit, they might just be able to get back on their feet. Then you might ask why the government would help bail them out. Over the past few days, investors gathered around in front of the Evergrande building and asked for transparency and more information. But well, let's just say that China does not have a great track record with people gathering up in unity and asking for something. So a $669 million investment for the stability of the regime doesn't sound like a bad deal. So what can the Chinese government do about this situation? It all boils down to whether the government is willing to prevent a bubble from bursting and preventing a domino effect from taking place. When I first heard this news, my initial thought was that the CCP is completely capable of doing so, and it's mostly a matter of how they will approach it and tackle the problem. Interestingly enough, there was an article written yesterday stating that Evergrande is in fact not too big to fail. The reason this article is important is because it was written by the Global Times, which is a media that directly reflects the stance and position of the Chinese government. So this is actually pretty negative news for Evergrande. But the Chinese government has been saying one thing and acting another way because China's central bank injected $14 billion in cash yesterday and another $15 billion today. And since the liquidity they provided was the most they've done in the past 8 months, I think it's safe to say that they did have the Evergrande issue in mind when they made this decision. Now let's take a look at what experts think. So Michael Burry, the dude famous for The Big Short, retweeted this thread on Twitter, and just to summarize it, here are a few points. The 3 red lines, which are the debt-related restrictions, began last year. China has been lifting the real estate market by leveraging a lot of debt, and the government wants to deleverage. It's almost certain that Evergrande's bankruptcy is a matter of time, but the question is how severely other companies and financial institutions will be affected. Of course, the Chinese government will provide liquidity in the market, but it won't directly intervene and solve the problem for Evergrande. So overall, it could be said that Michael Burry agrees with this thread that states that Evergrande's bankruptcy is inevitable and that the Chinese government will indirectly intervene if it does decide to intervene at all. So a crisis in some form will certainly take place. It's a matter of the degree to which it takes place. Now, unlike Burry, there's some other experts who think this won't necessarily lead to a financial crisis. Christopher Balding is a professor at Peking University, and that's the most prestigious school in China for those of you who don't know. His logic is that we won't see a financial crisis because we're applying the logic of the free market to a country's market that is actually completely under control of its government. So this professor believes that the Chinese government will bail Evergrande out for sure. Both arguments are really interesting, so if you have the time, I recommend that you read them both. As for me, I'm not too sure of what type of action will be taken, so the best I can do as an investor is to keep my eyes open and look at how the Chinese government might directly or indirectly solve the issue, and depending on how the situation deteriorates, I might even have to increase my cash holdings in the US stock market in case the US stock market is also affected. As we can see here, the S&P 500 index is testing the 60 moving average on the daily, so I have my eyes on that as well. So that is it for today, guys. I hope this video was helpful in explaining the situation that Evergrande is going through and why this could cause a market collapse. If you guys enjoyed this video, make sure to drop a like, subscribe for more quality content, and I'll see you guys in the next video. Take care.